Hey everybody, it's me, Gregory Mannarino. How are you today? It is Monday, November 13th, 2017. So this is what's going on right now after last Thursday and Friday sell-off in the bond market. Bonds are trying to stabilize here. Some entity or entities is in there buying bonds at this time. Now you can see this in real time, and I urge you to have a look at it right on my website, traderschoice.net. Stay on top of this and you can kind of see what the stock market is going to do. Now, referring to that, if in fact they are successful here in stabilizing the bond market, and I think they're going to give every effort here to stabilize the bond market. If they do not do that, stocks will fall. Now, as I said, the bond market is kind of stabilizing where it is, and stocks appear to be trying to rebound from their current levels. Volatility right now was higher earlier. It's coming down a little bit, still up. We need to watch that as well. But the bond market is definitely where you want to be looking today. And I wrote an article on Saturday. I don't know if you saw it on Steam It, which went over specifically with a nice little chart there, which said basically that if we don't get this bond market to stabilize, there's going to be a problem. Well, today, this morning, they are trying very hard to stabilize that bond market. Now, who would be buying here? Let's think about that. It's insane. We have a Federal Reserve that is promising to raise rates. So who's rushing in to buy bonds where they are right now? You see the fakery right in front of your face? Well, here it is once again. Speaking of that, the SEC must have gotten hammered by all of us. Hundreds of you, multiple hundreds have written to me about how you also sent in a complaint to the SEC regarding gold fixing. Now, a lot of you have also asked, hey Greg, how come you didn't target the CFTC? The CFTC is well aware of this, So I figured, hey, you know what? We're going to try a different avenue here. We'll try the SEC. If they get enough people to write to them, and it looks like they certainly have, they might have to look at this. Again, the SEC has something to prove. Again, the whole Bernie Madoff thing that they completely missed, well, that's another reason why I chose the SEC here. And hopefully something will come of this. But we'll see how it plays out moving forward. And I want to thank all of you that did actually file a complaint with the SEC. And again, I think with the hundreds and upon hundreds of you who followed suit with me, we'll see how this thing plays out. It's going to be very interesting. Just real quick off of that, Zero Hedge just put out an article about how the SEC is retaliating, believe it or not, against whistleblowers. Go check Zero Hedge website. It's very interesting. The corruption is to such an extreme here, people. I mean, it's hard to get your head around. There's no doubt about it. But before I go off here on a tangent, let's watch that bond market today. Again, the bonds are being bought up, and you can see it in real time. You can actually see this. Go to my website, right side of the page under the chat room. Look at the bond market chart. You can see how they're trying to buy it up. Again, who's buying? Who in their right mind would be buying bonds here in an environment where the Fed is going to raise rates? It's insane. Well, it makes no sense to me, and it shouldn't make any sense to you, but they're rigging it. It's being rigged, just like the gold market is being rigged, the debt market is rigged, the stock market is rigged too. They're going to try to stage a rebound here today. I'm pretty sure about it. Let's see how that turns out throughout the day, and we will cover all of this at the end of the day at my market wrap-up. All right, with that said, oh my goodness, I almost forgot. If you didn't see this, a new interview with Greg Hunter, USA Watchdog. Don't miss this. I will place a link in the description of this video if you haven't seen it. I think you'll like it. All right, with that said, watch that bond market. Over and out. See you later.